Hi, I'm Jimmy. In this video, we're going to look quickly at the rule of 72. The goal of this video is to help us quickly be able to calculate either what interest rate we may need in order for our investments to double up, or how long it will take for those investments to double. So how long will it take for us to double our money? So this is a fairly simple calculation, and the video shouldn't be too long at all. But before we get into the calculation itself, I think we should really clarify the difference between compound interest and simple interest. So let's imagine that we have $10,000 and we say, okay, we're going to earn 10% a year for the next 10 years. Well, 10% of $10,000 is, we could say, okay, that's $1,000 a year. 10 years, that's $10,000 that we've earned. Therefore, in 10 years, we doubled our money. But this is simple interest. We know that it's simple interest because the assumption here is that our $1,000 that we earn each year isn't earning anything for us. Compound interest, on the other hand, is when we assume that the interest that we earn will then be reinvested and earn interest for us. So if it takes 10 years to double our money with simple interest, how long will it take to double our money with compound interest? Well, this is where the rule of 72 comes in. And it's really quite simple. So we take 72 and we divide that by our expected return. In our case, we're saying 10%. Now we need to divide this by the whole number. So I know that 10% is actually 0.10, but we're just going to say 10. So 72 divided by 10 tells us that it will take 7.2 years to double our money using compound interest if we can earn 10% a year. Simple enough. So what if we earn 5% a year? Well, 72 divided by 5, and just like that, we know that it takes 14 and a half years, give or take, to double our money. But what if we said, hey, I want to double our money in 5 years? What do we need? How much do we need to earn to make that happen? Well, the rule of 72 once again works for us. So we take 72, we divide it by 5, which represents the 5 years that we're looking to invest. And just like that, we realize that we need to earn 14.4% to double our money in 5 years. Now, for all of the critics out there, we might look at this and say, well, it doesn't really work. What if I wanted to double my money in 1 year? Well, 72 divided by 1, and we get 72%. And yes, this is true. The rule of 72 is supposed to be a quick and dirty way to make calculations. And it's not nearly as effective on the extremes. So 1 year, 2 years, 3 years, it's somewhat weak, but it's getting closer as the number of years increase. So with our 5-year example, well, the exact math, if we were to earn 14.4% for 5 years, assuming we started with $10,000, well, at the end of 5 years, we would have $19,594. So not exactly $20,000, not exactly a double of our money, but fairly close, considering how quick and simple the math is. And this is also true when we're calculating the number of years. So let's say we're going to earn 72%. Well, 72 divided by 72 is 1 year, but as we know, we need 100% to double our money. So we didn't in fact double our money with 72%. Once again, we have to stay away from the extremes. So if we stay with, let's say, reasonable numbers, then this shortcut could really serve us well. And I'm guessing that most of us want to earn as high of a return as possible to help us double our money faster. And I think a lot of that comes down to our ability to invest smartly. And if we're going to invest in individual companies, I think we need to make sure that we have a good understanding of that company. And I actually did a video where I go through the 8 steps of analyzing a stock. And if you're curious, perhaps that could be a good next video for you to watch. I've got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks, and I'll see you in the next video.